This video does not constitute financial advice. I'm not a financial advisor, so it's for entertainment purposes only, and you should undertake your own research or consult with a professional financial advisor before making any investment decisions. Welcome to the channel. This is a new channel and my first video, so cut me some slack in the editing. However, I'm not new to this market. I've been invested in precious metals for 20 plus years, and investment research has been like a second job for me during all that time. On average, I spend a couple of hours in the morning and most evenings listening to and analysing the markets. I do it not because I'm desperate to make a killing, but because it interests me. I've always been intrigued by the markets, corporate value and trading. Ever since I was at school and watched a documentary on the 1987 market crash, I was enthralled by it. I once found a copy of the Financial Times and spent about 3 weeks reading it from cover to cover, understanding hardly anything, but desperate to learn. I took an investment in financial services higher national diploma and scored distinctions in every class. I loved it, and I was consumed by books about money and finance and the economy. Despite not doing very well at school, I think I found my vocation along with technology at a very young age, and somehow managed to make a good living out of both. It wasn't, however, until 9/11 that I started to question things. In 2001, everything changed. I looked more closely at the state of global economies, and I asked myself, why was there so much debt? Various blogs suggested markets were going to collapse imminently in the years following 2001, but actually they did the opposite. They boomed. Driven by even more debt, the markets kept going until late 2007, when I was very well positioned to make thousands in leveraged shorts to take advantage of the crash. It was my first big win. But for me, always being against the debt because my parents told me never get into debt, it was a fake market, and it was bound to crash. Towards the middle of 2007, I was having my doubts though. Irrational exuberance was eating into my shorts, but ultimately reality did strike. All of this debt had me thinking that inflation, rather than deflation, was going to ravage economies, and it has done so in many countries. It's just that in the West, inflation has been hidden by a combination of fake reporting and manipulation. We've seen real estate share prices in the primary indices and other debt-inflated assets almost hyperinflate, while commodities have been slow to follow. Meanwhile, in Argentina, Venezuela, Iran and Turkey and many other non-Western countries, we've seen the prices of stuff they need, food, energy, insurance for example, go through the roof. And yet here in the West, we've largely avoided it so far. But I'd argue that food inflation, for example, is more realistically at around 5 to 10% and accelerating, rather than the 2% that governments tell us. These lies are really just designed to delay the inevitable. Huge amounts of currency have been created into existence from nothing, but the velocity has not yet caught up. The clock is ticking, my friends. We're at the cusp of something very big and bad, and I fear we're getting very close indeed. This is what got me interested in gold and silver back in 2001. It's been 20 years since the horrors of 9/11. And somehow the powers that be have maintained some sense of normality in the financial system. I think that behind the scenes, things are anything but normal. I think the reality is that the Western monetary system is crumbling, and there's nothing that can be done to stop it. Money printing can only delay the inevitable, and even that is now being hidden from view. While many people will be shocked and horrified by what's about to unfold, there are some, in increasing numbers, who are preparing. Indeed, governments globally are preparing their people for what's about to come. The recent lockdowns, closure of businesses, preparations for digital currencies, gold being added as a Tier 1 asset for bank reserves, money printing on an unprecedented scale. What we are seeing here is a controlled demolition. But don't be fooled. A demolition is still a demolition, and many people are going to be financially destroyed. It's virtually impossible to predict when the financial carnage will begin, or what we should do to prepare ourselves. But gold has 5,000 years of history to suggest that it might play a role when the dust has settled. Bitcoin? Well, for me, as a technology analyst, it's a distraction. Tech is subject to obsolescence, and Bitcoin is past its sell-by date already. It's a bloated, slow protocol that uses huge amounts of energy, and it's accepted as money hardly anywhere. Big corporations are buying in, yes, but big corporations are often wrong, and they have been wrong many times in the past. We already have new distributed ledger protocols such as Hyperledger that far outperform the blockchain, and even better tech is going to emerge in the future. Personally, I put my money on gold, because gold is and always has been money. Gold is a recognisable, fungible, portable, valuable asset that can be exchanged easily for goods. Can't eat gold? True, but you can exchange an ounce of gold for about half a ton of rice, which will feed your entire neighbourhood for weeks. Those in power know that gold is really money, and why they don't tell you that it's money is because they're hoarding it. You're left using currency to fund your life. Unfortunately, every dollar, pound, yen and euro is owed to somebody else. Currency is just debt. Every bill in existence is a debt note. That's because banks lend people money. They are creating digital money into existence through fractional reserve banking. The savings in reserves are just a fraction of what they create. They're creating money out of nothing, or rather, they're creating debt that you owe back to the bank. But what they don't tell you, what they're not creating, is the interest which is owed on that debt. Therefore, there's not enough currency in existence to cover all of the debts. It's the biggest Ponzi scheme since Roman times. Gold, on the other hand, is owed to nobody. It is a measure of real wealth, and it is reflected by the fact that it has kept pace with inflation of goods and services for thousands of years. So potentially, gold might play a role in what is to come. Usually, when a fiat currency has run its course, the people accept nothing less than something of real, tangible value. Every single fiat currency in history has eventually succumbed to hyperinflation. The dollar as a reserve currency is already past its sell-by date. Reserve currencies last for around 70 to 90 years, and the dollar is currently 77 years old as a reserve currency, or at least it will be in June this year. I'm strangely reminded of Christine Lagarde's speech from 7 years ago about the magic number 7, when she celebrated 70 years of the birth of the IMF at Bretton Woods, also the birth of the dollar reserve currency. Perhaps they're trying to tell us something here. Click on the link below to listen to her numerological ramblings. So here we are, in 2021, and gold is taking a battering, perhaps influenced by the Ides of March. Indeed, it has been a fairly rancid 8 months for gold. But if I cast my mind back to 2008, I remember being heavily invested in silver and feeling exactly the same. It was practically destroyed as it fell from a euphoric high of $21 in March 2008. The following 8 months saw it collapse to a low of $8.50 in October 2008, along with the stock market. I remember trying to buy some Silver Britannia coins, and the dealers would sell them, but there was a 6-week wait before you could receive your order. I ordered some 2008 coins, and at the time was rather disappointed to receive a mix of dates from the late 90s, although now those early release coins go for a large premium, so the dealer actually did me a favour. However, they simply could not source anything else, and because I called them 6 or 7 times to chase them, they caved in and eventually sent me what they had. To me, the current market feels very similar. It could fall more, but we're now 8 months into this, what I would call a correction, and we're seeing all of the same scenarios play out. The general stock market is pulling back, dealers are out of stock, spot prices in the metals are being pummeled. But what happened after the correction in 2008? Silver rose from its low of $8.50 to almost $50 in the following 3 years. That's more than a 5-fold increase in 3 years. Imagine what prices of miners would look like now if we saw a repeat of this scenario. The reality is that a combination of factors could all converge over the next few years. We have the silver squeeze movement sucking up physical supply, which will undoubtedly have an impact on upstream supply, even if it takes some time, regardless of what Jeff Christian says. We have global debt levels and money printing at all-time highs. Commodities are breaking out of long-term downtrends. We're entering an economic reset based on sustainability, where silver has a big role to play. Just a couple of weeks ago, we entered the Chinese New Year of the metal ox. Perhaps it will also be the year of the gold and silver bull, at least the beginning of such. These relatively short-term downtrends are normal and healthy adjustments in any market. In my own personal view, and talking about years of experience, I recognise the same negative feelings inside myself that frequently come either on or shortly before the bottom in a market. If I'm right, then we're about to see some spectacular moves in the metals. In future videos, I intend to undertake some closer analysis of the precious metals market and help you to understand the whys and the hows of the market activity. We may be in the third or fourth innings of this bull market, but the game is still very much in play.